update in the futures markets. No, I haven't been on here in a little bit. And also show you another indicator that you can use if you want for doing swing and day trading in these markets. So let's get right into it. Welcome everyone. This is Futures Brizio, 12:50 p.m. on Thursday, December 11th, 2025. Hope everybody's doing well. Sorry I haven't been making many videos. Price action in the market's been a little up and down, choppy. There's been some trending, but it hasn't been anything really great to like make a lot of videos on. Plus, I'm going to be heading out of town next week for the holidays for a couple of weeks. So I've been trying to wrap up a lot of stuff and get ready to get out of here. So I've been a little tied up. So I apologize. It's been about a week since I made a video. So we'll just do our quick update here on where things stand just in these markets. And then while I'm going through that, I'll show you this indicator. And again, guys, you don't need to use any indicators. Again, I just generally just use market structure for, looking at where's the trend, what levels have to be breached before I feel that trend is in jeopardy. And for me personally, I like to look on, about a 4-hour chart, maybe higher, but around 4 hours is good in futures. If you're using Forex, if you're trading Forex, I only trade Forex on a funded account, and I only trade on the daily chart. I literally only look at the daily chart. I may go down to a shorter time frame for a little fine tune, but in talking about futures, which is primarily what I trade, I think the 4-hour chart is good for kind of setting levels of turning points. But it's, in terms of indicators, I mean, like on this soybean oil chart, like you could throw a 50-period moving average on here. That's my preferred moving average length if I was going to use one as a 50 simple moving average. But I find moving averages, although I've made videos, and somebody commented on my 50 SMA channel video that I made about 2 years ago, where you put two moving averages on your chart, both same length, but you set one to high, one to low, or open and close, so it creates like a channel on your chart. Still very viable, which is what I said to the person that commented. So I may throw a moving average on, but I tend to not leave them on all the time because I do find they can be a little, to me, can be a little distracting. And I find sometimes they put a little unconscious bias in my mind. So I still, on the actual chart itself, I still like to just look at the naked chart. If you want to throw an indicator on here, again, we've looked at various indicators here. This is another one, probably a pretty common one. It's a combination of Stochastic and RSI. So we'll get into that, and I'll show you how you can potentially use this. All right, so we'll just start at the top here, and we'll look at rice. Again, we'll zoom out to the higher time frame. And again, I still keep beating the dead horse on rice, because if we look back at long time frames, we are still sitting right now. We're at that 980 area, and I said, between about 930 and $10 is kind of a long-term support. So we're still not at the long-term support here at 930, 940. But, and again, as I also said, those are not all-time lows. So here's that 930, 940 zone right here. And you can see prices around 980 right now. But there is a stronger support zone down here, again, around the 940 zone. But you can see down here, there are lower swing lows down here at 660, and then way down here at 372, 370. I don't expect prices to get down here. I do expect a reaction off of this around 9, if not from where it is now, anywhere between where it is now and the 940 zone. So I've been very hesitant about taking short positions in rice, and I think if you do, you need to be realistic on your expectations, just because of the that area sitting down there, kind of that long-term In fact, I'm going to throw a horizontal line here at these lows and, kind of mark that off here. And you can see if we go back now to the 4-hour chart, let me just reset this to a normal view. You can see here's that line that I just drew on the weekly chart. So you can see, I mean, there's a little bit of room here between where price is now, but you can see there's not a lot more. And I think when price gets down here, it doesn't mean we'll have a full-on reversal. But even a good bounce on a weekly chart can turn into an extended trend on a 1-hour, 4-hour chart, right? Because it's just the time frame you're looking at. So I've been a little hesitant to take more shorts here, but certainly there have been shorting opportunities in this market. So let's take a quick look at the indicator. Now, I found for the markets I trade, this indicator works best on about the 1-hour to 4-hour chart. And if you really wanted to dive down, again, you could look at down to like a 15-minute chart. It will give you more signals, but of course, the shorter you go in time frame, the more potential false signals you'll get. If you use it on a longer time frame, as long as the market is still trending in that direction, the signals tend to be better, but you're going to get a lot less of them, right? So if you go to a 15-minute chart, you might get a signal every single day, right? Doesn't mean they're all going to be good, but you'll probably get one. If you go to a 1-hour chart, that's going to make it a little smoother. Maybe you'll get 1 to 2 signals a week following this indicator. If you go to a 4-hour chart, even if we just look here at the last 2 signals, this was on November 24th, and then the next one was right here on December 8th. So that's like 2 weeks in between signals. So it just depends what you want to accomplish, right? And it also depends how much time you have. If you don't have time to sit there and look at 15-minute charts just due to your life, work, whatever, then these swing trading signals are fine too. So this is the Stochastic RSI. This is what it's called. You can see it right over here. I did not change any of the settings. I put it right on the chart as is. So if you look it up in the indicator section of TradingView, it's just type in Stochastic RSI. This will come up, and it defaults to these settings 3, 3, 14, 14. It's basically combining the math of the RSI and the stochastic indicator. You can play around with the settings. I just use these default. And how I would trade this are for re-entry signals within the trend. So basically in this case, if you take like this one right here, when the blue line, we're looking for sells here. Obviously, we're in a downtrend. When the blue line crosses, first of all, the both lines have to be above this 80 zone, which is considered quote unquote overbought. So in a downtrend, you're looking for the both of these lines to get at least back to the 80, if not above them, above the 80 zone. And then you're looking for the blue line to cross back below the orange line here. And of course, you can change the colors if you want. I'm not really using the 0 line. There is a 0 line here. I'm not using the 0 line. I'm just using the oversold, overbought areas. Overbought if you're in a downtrend. Oversold if you're in an uptrend. And so you're looking for this cross down, and then that would be your entry. Place an appropriate stop loss either above that current swing or the next one, which would be like up here, to give it a little breathing room, because you will find, especially on shorter time frames, that you'll get a false signal. Price will then keep going up, and ultimately it may end up turning and coming back in your favor. But you could end up getting stopped out only to have it turn and go in your favor. So it just depends what your risk tolerance is for drawdown. You can either take the loss and then re-enter on the next signal, or put your stop far enough away to give the trade a little breathing room in case, that turns out to be a false signal. And again, the higher you go up on the time frame, the less false signals you will get. Doesn't mean you won't get any, but you'll get less of them, okay? Where if I go down to a 15-minute chart, I'll find a lot of signals here on this asset or any asset, but you won't get as many signals. So we had this one here on November 24th. That turned out to be a good signal. And then we had this one on December 9th, which was 2 days ago. And that one, your entry would have been on this candle. And, you can see it did go down and make a new low, which is today too. So you would have been holding this trade at least 2 days through all of this. And, you can manage the trade on the way down however you want. That goes beyond the scope, whether you use a trailing stop or you just want to go back to the previous low. Would have been fine on this trade, or you use Heikin-Ashi candles and you stay in the trade until you get a bull candle form on a Heikin-Ashi chart. We switch to Heikin-Ashi, right? There's your entry, and according to Heikin-Ashi, it'd still be in this trade because we're still painting all bearish candles. So whatever, or use another indicator, or wait for price to get down into the oversold area down here and then exit. Now that price is now back below the zero, below this 20 line. So maybe, back here when it starts to cross back higher again, that's your exit or whatever. There's a million different ways you can exit. I'm not really talking about that. I'm talking about entry methods. Okay. But again, you still want to recognize market structure, right? So before this low was put in, this was your structure level, right? So to me, I'd be looking and say, okay, we're still in a downtrend as long as this area doesn't get breached, which it didn't. We pulled back. This was, what I would consider a relevant pullback. All of these are like internal structure. You can almost draw a trend line down here that would encapsulate all of this. And so I don't consider these valid pullbacks. It's these big ones here with like, big bullish candles in the opposite direction that go on for, at least one session, 2 sessions or so, and then, turn and go back down. So now that we've made a new low on this, I would just take this line, move it down here. And now I say, okay, this is our line in the sand. So now any pullback here, you would assume that this indicator would turn, come back up. If the downtrend is going to continue, this indicator would turn back up and eventually get back up, above into this overbought line. And then at that point, you would look for another crossover signal to go short once again. Okay, so that kind of stuff, right? So, and again, you can do this on any time frame. Okay, so let me take this arrow off, and just for the sake of this market, and we'll go through the other ones a little quicker, guys. I just want to show you this. So here's the 1 hour chart, same market. Here's what I'm talking about, like potential false signals. So you could say that, no, this is not a false signal because this is basically a day trade, and you'd be right. You get a crossover right here, and you have to look at this candle that after it crosses. So, and here would be, even though this is a bull candle, the signal was right here. All right, you can see down below the blue line crossed underneath the orange line right there. And then it went down for 1, 2, 3. Basically, it made a new low and then it chopped around. It kept around this low. So basically, over the next 4 hours or so, this market just chopped around at this low. But then you can see it turned and went back up. So if you decided to hold this, you would have either been stopped out or be in pretty significant drawdown as this turns against you. I'm not saying you necessarily would, but you can see this is, depending what your point of view is, this is a false signal, okay? Because you did not go down and make a new low. Now, if you had held it through the drawdown, or even if you closed the trade and you got another signal here, so this was on Friday, December 5th, and then you had another signal come in on Monday, so one trading day later, or 1.5, you want to count Sunday night, then you got a valid signal here. This one would have been good, okay? So you can just see there's more potential for false signals. Here's another one right here, right? Crossover, it went down for one candle and then shot back up again. And again, maybe you would have held this through this little drawdown. If you had your stop loss up here, you would have been okay, because then you got another signal right here. So yes, you would have gone into some drawdown if you went short, like at the close of this candle. This all would have been drawdown right here. Not terrible, but it is drawdown. This is a 1 hour chart. So basically for a whole session, essentially you would have been in drawdown, and then you would have gotten this signal right here. Okay. Now, if we mark this signal on the hourly chart, we go back to the 4 hour. All right. So this is where the 4 hour is going to give you less signals, but they're going to be ones you can hold on, because on the 4 hour chart, you would not have taken that trade, because look where the indicator was way down here. Okay. So this trade you would have missed on the 4 hour chart, but that's okay, because if you had gotten in over here, you'd still be holding this trade all the way down here. So But, if you miss this one, this would have been another opportunity, but you don't get that signal on the 4-hour chart, okay? So that's what I'm saying about you have to decide what time frame you're comfortable with jumping into these on. And just understand the lower you go, the more signals you'll get, but the more risk there is in them being false signals. And of course, if you go to a 15-minute chart, you will definitely get more false signals. You'll get a lot more of them, but they're not all good. Okay. This one's a false signal. This one's basically a false signal. This one's a false signal, but this one's good. No, this is a false. Again, it's not a huge drawdown. You can wait depending on your stop loss. This is a good one. This one would have been good. This one would have been okay. So you can see it's about 50-50 on these short time frames. So you just have to decide what time frame these indicators work best on. And that's the other thing. This is rice, all right? This indicator may not work as well on certain assets on certain time frames. I'm not saying you can't use it on any asset, but you may find that on a 4-hour chart, this thing doesn't generate any signals at all. There's just not enough volatility in this asset to really get signals more than, maybe weeks and weeks apart. Where, so you have to go to a shorter time frame to even make the indicator be, reactive at all. Okay. So you have to decide that. On rice, you can use this on a 4-hour for swing trading or a 1-hour or a 15-minute. Just understand the lower you go, like any indicator, the more signals you'll get, but the less reliable they are. Okay. And the more, you have to consider risk and what you're willing to take a chance on. Okay. And how much drawdown you're willing to hold. So, for this asset, I think the 1 hour is a nice compromise. You get about one trade a week. Right. Here's November 21st. And then this is December 2nd. So this one, is about a week and a half. Then you get this one on December 5th, which is, technically a false signal. So if you go back to this one, December 2nd, next one's on December 8th. So there's a week, right? So on the hourly chart, you can expect maybe about one trade a week. On the 15-minute, you might get December 4th, December 8th. You might get 2 to 3 trades a week on the 15-minute, but there's a higher chance those are going to be fault. One of those will not work out. And on the 4-hour chart, you're looking at probably a good, 2 weeks between trades. So in this market, right? So 4-hour chart, swing trading, expect about 1 trade every couple of weeks. 1-hour chart, maybe 1 trade per week instead of every 2 weeks. 15-minute chart, 2+ trades a week, but more chance they're going to be false. Okay, so you get it. I'm not going to keep beating a dead horse. All right, so that's rice. So again, trend wise on rice, just understand where we're at long term. And just understand as we get into this 940 zone down here, which, we may get to, doesn't mean price will stop. It could smash right through there. I did show you there are lows below that. But I would expect to see a bounce off of this zone. And, even if it's just something like this or even like this, this is a weekly chart. So a bounce like this off of a weekly zone is a long trend on an hourly time frame. This goes on from mid-May through September, right? So this is what is that? 4 months, right? This little correction here is 4 months of trading opportunities. So, right? So don't dismiss those bounces off of a weekly chart and keep those levels in mind, okay? All right, so let's just move on from rice. We'll go to soybeans now. Here's our 4-hour chart. All right, let me just clean up, take the drawings off of here. All right, so here's our 4-hour chart. Again, we are still trading here. We've had this downtrend going. If we zoom out a little bit, we do have this area down here. There is a little gap back here. This is on the 12-hour chart. So let's see what happens as we get down here, maybe, towards filling this old gap. But overall, this is still in a downtrend. Again, I don't try to predict how long those trends will last, but this is still basically in a downtrend. Although we seem to be finding a little bit of support. Now you can see even the indicators getting really choppy in here. It's not giving really clean, smooth signals. We did actually get a little crossover signal on the 4-hour chart today, but you can see that it didn't really go anywhere, right? Sorry, guys, my dog is barking. Sorry, guys, I had somebody come to my door. So bad. But you just can't predict those things. But anyways, so we did have this little 4-hour signal right here, but you can see price is not really reacting off of that zone. We're not getting, a really big pull, resumption of this downtrend. But, I would probably mark this as a potential swing area right here. If it goes down and makes a new low, if this follows through and does go down, this would be a good swing point to mark off. There isn't a really good clear one here. Maybe like this high up here is a swing, a previous swing high right here. I mean, it's not real obvious in this market, because if not, then you're looking like up in this area here. All right. But if we just looking at what price is doing right now, again, we did get that 4-hour signal today, but it's, as of right now, it's not working out. And I'm still testing this indicator. Oops, where'd it go? Well, that's not good. I'll put that back on the chart. Okay. So, we still got this area here. So let's see what happens. But there was a signal here to go short. Here it is on the hourly chart. This is during the overnight. So here is the morning session right here today. This is the 1-hour chart. We did get a little crossover here, but you can see price went down a little bit and then rejected. So this is literally interesting. So we'll see if we're going to get a turn and go higher, or if this is just a corrective phase. But you can see, you're not always going to, the signals are not always going to work out. This one, even on the hourly chart, would have been a false signal, because it only went down a little bit. You'd be back to, at best, break even right now. And so we'll see, what happens here. The market's only going to be open for another hour, so probably nothing today. So let's keep an eye on soybeans to see if this 4-hour signal ends up working out maybe tomorrow. You can see the last time we had a signal here, price did actually go up a little bit more, and then we finally got a bearish candle. You can see we had a crossover on this candle. And then the next candle, it went up a little bit more, but then it closed lower, and that was the entry candle, was right here. So, maybe we'll just kind of chop around, and then, maybe we'll get an engulfing candle tomorrow, and this thing will, this signal will follow through. But if it doesn't, and we keep going higher and start taking out, and we put in a higher low right here and start breaking higher, especially if it breaks this high, then maybe we'll have a change of direction. So we'll watch soybeans, and this is kind of the same thing with all the soy complex today. So here is soybean meal. Let's just get this alert off the chart. I had that running earlier. Here's the 4-hour chart again, downtrend. I marked off, this is, to me, is the structural level, because this swing high led to this new low. We did not have a signal today on the 4-hour chart, on the RSI, on the stochastic RSI. On the 1-hour chart, we did not either. Okay, we did make a little move down here today. This was today's price right here. And you can see it did kind of make a new low, but it snapped right back, and it's basically back to where it started. So, if you follow the indicator, this actually would have kept you out of this trade, on this time frame, because the indicator was not up in the oversold area before you took that long. I mean, that short position, right? So this actually would have kept you out of this trade. So again, here's our structure level. As long as price holds below here, the downtrend remains in place. And then looking back in time on the 1-hour, we have this signal. This happened yesterday. This would have been a good signal on the hourly chart. So again, on the 4-hour chart, there are good signals here, but they're going to be pretty spaced apart. So let's look at this one, November 19th, and the next one was like December 2nd. So again, about 2 weeks apart. So it's kind of the same thing. On the 4-hour, you'll get probably 2 weeks between opportunities in a trending market. On the 1-hour chart, you'll probably get one a week. Pretty much the same thing. But again, you're waiting for the indicator to get, in the case of a short position, into the overbought area, and then look for your signals at that point. Anything in between or below, in this case for a short, anything below this 80 line, I would just ignore. So all right, so that's that. We're looking at Canadian dollar, switching gears for a second here, away from the Soy Complex. We did have this ranging market. Let's go to the 4-hour. We had this ranging market right here. Price chopped around in here for about 2.5 days. And then we did put in this low yesterday, and now we've broken out of this here. Then we came back, retested. This is a classic break and retest on the 4-hour chart. And there was your entry with the indicator on this big breakout candle right here. And if you had gone long on this, like up here, you would have gone into some drawdown on the pullback. I would have put my stop below this candle, so you would have been safe. Although you would have had, about a day of drawdown here, and then you'd be in some profit right now. The other thing you could do is go to the 1-hour chart if you were confident the uptrend was going to continue. In this case, you'd want to wait for price to get into the oversold area and then move back higher and cross back. So there's an entry here. If you had gone long right here inside this range, I mean, in the end, it would have worked out, but you would have been in basically chopping break even or some drawdown for about 2 days here. Right here. Then theoretically, I guess there was another one here. This one's not great. There's another one here. There's another one here. And you can see anywhere of any of these signals here. And this is what happens when the market moves sideways. Indicators are going to give a lot of false signals, especially on shorter time frames because of the chop. But any of these signals, as long as you could withstand holding it for a few days through break even or drawdown, and you had a decent stop loss, eventually would have worked out. And these actually would have been the best places to get in, anywhere along here. And then we broke out, and then you wouldn't even have to wait for that 4-hour signal, because you would have already been in from back here inside the range. You just have to be confident that you think the price is going to go higher, in which case I would go to the 4-hour and say, okay, if I think that it's still in an uptrend, again, go back to the 4-hour, look at like a zone like this being like a previous swing area or a previous pullback area, whether you want to look at here or down here, whatever. The market is clearly in an uptrend, right? Or put a moving average on the chart. So let's get rid of these two. This range has been broken now. I'm going to remove that, and we're going to move this line up to here. And, I think this kind of becomes our line in the sand. There's a minor level here, but this is clearly the bigger one on the 4-hour chart. Okay, so that's how you would do this on Canadian dollar. All right, so we're still in an uptrend here. And so you want to enter this assuming that you think the price is going to keep going up. We'll wait for, I would say on the 1-hour chart, for this indicator to slide back down again into the oversold area, and then wait for a crossover back up. And, if it looks right, then consider the long position. All right. Soybean meal is kind of like soybeans and soy oil. Again, 4-hour chart, downtrend here. I don't see a lot to keep this from turning, so I am still pretty bearish on this market. We don't have a signal on the 4-hour chart. I mean, the indicator is kind of like consolidated onto itself, but we don't have a signal here on the 4-hour chart. On the 1-hour chart, we did get a signal here during the London session. This is like 4 o'clock in the morning, which I don't trade. I'm not up at that time. And then we get into the North American session. We did have another, we didn't get a signal, but we did have the indicator already pointing down from overnight session. But you can see price is really not doing much. It's just kind of like range back. You can see, like I said, this was heading down. This may ultimately turn down. So let's see if this this signal right here ends up being a good signal. Okay. Unfortunately, it didn't really do anything today. We got the signal back here. Depending on your stop loss and tolerance, you'd be in some drawdown, maybe around break even right now. But you can see we didn't get any follow through on this. But again, going out to the higher time frame, this right now, if this goes and makes a new low, this would become a new swing high. I would say it's not that right now because we haven't made a new low. So right now, this is probably, even though this is a little sideways, this is probably the swing. This one doesn't make real big swings for the most part. So let's see if this turns out. Now, if the 4-hour gives us a signal later, tomorrow or overnight tonight, then the 4-hour chart could confirm this downtrend. And it just turns out that the hourly chart was a little early. Okay. But overall, soy meal is still in a downtrend. Okay. Corn continues to range. Okay. Again, I've been talking about this big gap that happened over a week ago. This was when the market opened on a Sunday. We made this big gap, and traders have not been able to decide one way or another what they want to do since then, just ranging inside of this 4-hour range here. And so, like I said, whether it's going to eventually break out of here and go higher, or whether it's going to snap lower, maybe try to fill this gap and then go back up, I don't know. But I have not traded corn since this gap happened. And until it decides what it wants to do, I'm just staying out. I don't like these range-bound markets at all, so I'm just staying out of corn. Okay, and then lastly on hogs, I think hogs works well on the 1-hour chart for this indicator. So again, look at the 4-hour. Again, I would say we're now in an uptrend. We've been going down for a long time, but we've now taken out a major swing, especially today. We took out, assuming this candle closes here, we have now broken this structural level here on the 1-hour. But even if you just wanted to trade this on the way up, just recognizing we were technically still in a downtrend. But let's say you wanted to trade this little up move up. And if we go to the 1-hour, you can see the entries here. There was one here on November 24th. And then we had one about a week and a half later on December 3rd. And then we had this one 2 days ago, which would have been good too. And you could technically still be in that one. So would I trade it now based on the indicator? No, because you can see we've now broken, we've made a new high, but the indicator is in the over bought region. So if you're using the indicator, then again, what you want to wait to see price come all the way back down here, back into oversold, and then wait for a crossover signal like this, okay, and then re-enter. Now, we could just get a simple retest, and this thing could shoot higher and never get a signal here on this time frame. And again, guys, you can always make this fit, but I'm not suggesting you do that. So what I mean by that is this is an hourly chart. Let's say I go to a 5-minute. All right, on the 5-minute chart, we actually got another signal right here on this little retest, okay, and to go long again. Do you really want to do that? It's up to you, but I wouldn't. If we go to the 15-minute, now this one, right, it hasn't gotten below here yet, but technically it might drop below here if price comes down a little bit more, maybe retest this breakout area here, which would probably force this indicator down into this zone, and then a crossover and bounce. So again, it just depends how much you want to be in the market, right? Do you want to just, if this moves without you, let's say it moves on without you and it just keeps going up, breaks this high, keeps going up, and you never get this, well, eventually in the uptrend, it will pull back, and you can see it won't take much. This is basically two trading sessions, right? This is Friday, December 5th, and then this bottomed out on Tuesday. So basically two trading sessions. It took 2 days for this to pull back and then get another buy signal right here on Tuesday. So it peaked on Friday, and then on Tuesday, you got another entry right here. Okay, So can you wait 2 days, or do you want to just, jump into these shorter time frame, where there's no signal? Again, it's completely up to how much time you have to look at the market, how long you plan on staying in a trade, how much risk you're willing to take in terms of potential false signals. Can you just sit and wait? And I think, like I said, this indicator to me, at least on the markets I trade, the 1 to 4 hour zone is kind of the sweet spot. You could go to a 15-minute for sure, but again, you're going to generate more false signals. Maybe you want to use a 30-minute. That, I don't think that's going to make much difference. Now, I mean, in terms of this, it's not going to help you. It just makes the 1 hour a little more choppy. So I wouldn't even bother. I would just stick to the 1 hour. So again, depending what your tolerance level is for risk and how often you want to actually be in the market trading, you have to decide that, right? And how much time you can spend looking at charts. Okay. But to me, look, if I can get one good trade a week on any of these assets, I'm perfectly fine with that, right? It makes my life easier, not having to stare. I say, okay, I know what direction I'm confident on the market direction based on the higher time frame, right? 4 hour, whatever time frame, at least the 4 hour. I'm confident based on the direction of the trend based on that. I've looked at the levels. I'm confident with that. Say, okay, fine. Now I'm going to go to the 1 hour and I'm going to wait for this indicator to give me a signal in the direction. I'm going to wait for a pullback. It's got to be a decent pullback for this indicator to react enough to, in this case for a long, to go back into oversold and then move higher. Okay. Or again, in the case of a short, to go into overbought and then move lower. Okay. And so that comes down to, I can't tell you what to do. I'm not telling you what to do anyways. You can just ignore everything I say because 90% of people lose money anyways. But just understand that, indicators can be great tools, but don't rely on them in a vacuum. You still got to know kind of like what's going on in the market. And the indicator is just maybe to help with timing, right? That's all they are. They're timing tools, right? They're confluence tools, right? Confirmation tools. That's what they are, especially oscillators like this. Okay. They're just to help you time your entries and exits and things like that. So, all right. So anyways, guys, that's about it. We're at 37 minutes, plenty long enough. I hope that was helpful. Again, we looked at, not only the status of these trends and where we're at in price action, but also looked at the stochastic RSI as another potential tool that you could use. It's kind of cool. It's a good mix between stochastic and RSI, which is why it was designed this way. I find the RSI, I've never been a fan of the RSI, to be perfect. I know some people love it. I've never been a fan of RSI. I don't find it to be useful. I'd rather use a MACD than an RSI. And stochastic, depending how you set it, can be a little too reactive sometimes. Of course, you can change the settings and make it slower, but this kind of combines the best of both. And again, I just threw it on the chart. I did not change any of the settings. And I think for what these markets I'm trading in the time frames I just went through, the default settings are perfectly fine. So anyways, I'll continue to refine this, but I'll leave it there, guys. Make sure you smash that like button on the way out. Subscribe to the channel. Any questions, comments, leave them down below. And we'll talk to you soon. I'll be back tomorrow. Again, it's Friday. Not always a lot happening, but we'll see if anything comes about tomorrow in terms of setups based on all this and see where we go from there. All right. Have a good rest of the day. Talk to you all soon.